What's up, traders? This is Matt with Conservative Trades coming at you with yet again another episode of The Trader's Mind. And in today's episode, we are going to be talking about the psychology behind fighting fear in the midst of very tough trades. For those of you who are new to the channel, The Trader's Mind is an episode series. I try to release one of these at least once a week, usually over the weekend, kind of after a long trading week and when there's time to reflect and think about even some of my own mentality behind my own trades on the previous week. Of course, this is an episode that I've kind of had on the back burner for a while, that I've wanted to do for a while because, you know, it's addressing a concern that many traders go through. Every trader that I've ever met has dealt with this, because the fact of the matter is, we as traders, especially I guess us as day traders, we form strategies that help us to be very profitable in short-term trading. And, oftentimes these strategies that we build are based on a lot of watching price action in the stock market work itself out. And we often identify this through technical analysis and chart patterns. Okay, these candlestick chart patterns. All right. And when you spend a lot of time developing strategies and you start to see these strategies work more times than not, you begin to have confidence in your strategy. And especially, if these are chart patterns that seem to work out favorably for you, maybe 6 out of 10 times, 7 out of 10 times, sometimes even 8 out of 10 times. Okay. When you step into a week of trading and you step into some pretty wacky market conditions, or when the markets are just kind of acting irrationally, stocks are moving irrationally, the chart patterns are not playing out the way that you would typically expect them to. And you're thinking to yourself, man, this pattern, every time I see this pattern, this works 7, maybe 8 out of 10 times. But yet every day this week, I've traded this pattern and I've been faked out on it 7 out of 8 times or 8 out of 10 times or whatever. And so when that happens, it can really start to break you down mentally. It can break down your confidence. It can start injecting fear into you. And when you go to make these trades on these typical chart patterns that seem to work out for you more times than not, it really can mess with your trades. It really can mess with your mind. And there could be a chart pattern that during this really weird, wonky, wacky, whatever you want to call it, week of trading, where you get burned on it so many times that you just stop taking it. And then the next 3 or 4 stocks that you're watching that chart pattern on, all of a sudden they'll start to work out, and you'll start kicking yourself because you're sitting there thinking, man, why didn't I take it? I know this pattern works out. Yeah, it's burned me a few times. Yeah, the market's acting a little crazy this week, but I know that it works. And so that's what I want to talk about today. Because I think there's a lot that goes into that mentality, and I just think that it's good to address it. So that's kind of what I want to use this episode for. And I will start by giving you some examples on a chart pattern that, as a short bias trader, has worked for me so many times. So here's the first stock that I would like to address this pattern on, and just kind of give you guys an example of what I'm talking about. So GILD had a massive run up, right? And right here, there was a lot of consolidation right here at this. It says 8404, but really it's more of the 8411 area. Okay. And it comes up here and, it finally breaks up through that consolidation, has a massive run up, and then it kind of starts dropping and starts dipping, and it comes and it bounces right there on that level. Okay. And so then it comes back. And oftentimes when you see these stocks come and double bottom, usually they're going to break through. If a stock has had this much of a run up and it comes all the way back to this previous area of consolidation, and it has this very light buy up, kind of like it had right here, but then it starts coming back over, typically it will break. And so I might want to go short here. And I might go ahead and put in, 200 shares to go short, because I'm thinking, hey, we could get a drop. We crack through this consolidation. We can get a drop all the way down here to, maybe 81, maybe even $80. So we're looking at maybe a $3 to $4 move on 200 shares, guys. On a very conservative share size like that, you can easily make 4 or 5 even $600, just depending on how long that you hold it. So I could take a cool 200 shares right here. And I could say, hey, I'll just get out if it breaks this candle. So you're risking roughly, I don't know, 40, $50 to make, at least $300-400. Okay, great risk to reward. Well, look what happens. It gets bought up and squeezed out. Obviously, there's a lot of people who were thinking that this was going to go short. Obviously, there's a lot of people just like me who think that this chart pattern can work out. But, this was in pre-market hours. And so there just might have been enough buyers to come in and cause a short squeeze. And I'll bet you that the vast majority of people on this candle are people who got squeezed out. They were just covering their positions. It probably just took a little bit of buying power up to these levels right here, and then you've got short sellers covering their positions, maybe all the way up, and then maybe some other people jumping in on the hype, thinking that they're getting a double bottom here and that this is going to have a massive run up. So there's probably some of that in there too, but we can see that it failed, right? It failed. It came back, squeezed up a little, failed again, came back, and then finally, look at this. And you see that little green dot? That's actually where I got in. But behind that green dot is actually a red dot, because that's where I got out. And here's why. Because I had such a, this was Friday. This was on a Friday, okay? And I had such a hard time in the week trading stocks. And I've had so many times through the week where this pattern just did not work for me, that even when I went short here, it just teetered around a little too much and I went ahead and got out. Why? Because psychologically, I was broken down. Even though I know this is a trusted chart pattern, even though this is a tested, proven chart pattern that has worked many, many times over, at least 7 out of 10 times, this chart pattern works. This chart pattern works for me as a short bias trader. And even though I've had so much confidence on this pattern, because the market is acting so irrationally right now, and it was so irrational this past week, and stocks just were not moving the way that they normally do, I bugged out a little. And here's how bad it affected me mentally. Not only did it affect me so mentally bad that I got in, and then within a minute, I got right back out break even because I was afraid it was going to pop back up, and do one of these. Not only did I get right back out, but when I got in, I only took 100 shares. Normally, I would take about 200 shares right here. Normally, I would take about 200 shares, but I only took 100 shares, so that's one way that it affected me. And then I got out too quickly, out of fear that it was gonna. I didn't even give it up to the break of this candle up here, to the previous 5-minute candle high. I just went ahead and got out. Okay, and then look what happened in the next 5-minute candle. Dropped the whole dollar. Now, it did eventually come back up, but if I had taken 200 shares or maybe even 300 shares, I could have scaled out at least 100 of those shares. Now, I could have at least made $100 off of that first drop, and then as it was coming back up, I could have got out break even. Okay, and it did come back up. So it did fail once again, and it wasn't until back here that when the market actually opened up that it started failing and it dropped, and we got a good $2.50 move off of that. So that was a really good move, and I did end up capitalizing on it. But even here, as I saw it rolling over and rejecting VWAP, I got in more kind of here at the anticipation of it breaking again. But it did. You can see this level. It clearly, when it finally clearly broke, it worked, and it worked out great. And I took profits all the way down. I even added back into my position here and took profits all the way back down. Okay, I had to fight that fear. I had to remind myself that yes, even though I've got slapped in the face several times this week, I know that by and large, this chart pattern works. I've seen it so many times. I've tested this strategy. When I spent 4 or 5 months in a trading simulator and I tested this strategy over and over and over again, yes, sometimes there were weeks where it just wasn't working out. Sometimes there were weeks where the stock market in general was just acting very volatile and irrational. And, sometimes the chart patterns just don't work out. But we can't get to the place of where we are so injected with fear that we just completely lose all hope, because when that move finally is made, it's going to be made really well and it's going to work out in our favor. And listen, even if you get stopped out 1, 2, 3 other times, right? Even if you get stopped out 3 other times on that move, if you can keep your losses small, that's the other thing. You just got to be committed to it. You got to say, look, if it comes up here, I'm going to get out. If it comes up here, I'm going to get out. If it comes up here, I'm going to get out. But when that one time works out, it'll drop enough times. It'll typically drop or move enough in your favor to where it will work out enough to where you will make all that profit back and then some. And that's really the key to day trading. Okay, it's not necessarily how many times can you be right. It's how many times can you manage that trade really well. It's how many times can you cut your losses short and let your winners run. That's what it really comes down to. Because you can be right. You can be wrong 3 times, but you're right one time, and it'll make up for it. As a matter of fact, my P&L for this day, I ended up the day over $220, and only one stock I was green on. I had traded three stocks. I had traded Roku, I had traded AMD, and I traded Guild. Okay, and I was wrong on AMD, but it was only like a $7 loss. I just took a $7 loss on it. I cut out quickly. I could tell that it wasn't going to work out in my favor. And then on Roku, I took about a $60 loss. But guess what? On this move on Guild, and with this break-even trade here on Guild, this was just a break-even trade. But on this final move on Guild, I made almost $300. It was like $290. So at the end of the day, I ended in the green. I ended up over $200. Okay, because I cut my losses quickly and I let my winners run. Okay, I was wrong 2 out of 3 times, but the one time I was right, it worked out perfectly. It worked out perfectly. Okay, so that's how we got to fight fear on tough trades. You just when it comes time to take that trade, you just say, you know what? I know this is typically, and this really, if I had played this well enough, and if I didn't let some of the trading that had happened earlier in the week get to me, if I had even gone short here, yeah, I would have been stopped out once. But here, I would have actually made money if I just let it play out. And then here, I would have made money again. Okay? But even if I was wrong here and took a $50 loss, and then I was wrong here again, took another $50 loss. Okay? If I had stayed committed here, I would have gained it back on that move. I would have gained back at least $100, and then I'd have to get out break even. But then on this move right here, I would have made that same $290. So it would have been $390. I would have been down 100 off of these two moves, but I'd have been up almost 400 here. So it well more than makes up for it. I'll show you another trade. Let's see. We have another trade here. Roku. Same thing happened. Look at this. Same pattern. It comes down. It came up to this point. There was a little consolidation. It finally broke up through it. Blue sky breakout. Then it comes back, touches once, comes up here, touches twice, moves around a little bit, and then finally touches down here, and then goes through this period of consolidation. Think about all this. People were building positions here. I mean, this could have broken out, and people would have gotten squeezed out. But guess what? What did it do? It kind of teetered around and finally broke and had a really clean break all the way down. Okay, I can show you another move right here on Tesla. If I just bring this chart down here on TradingView, check this out with Tesla. For those of you who are more long biased traders, look at this move on Tesla. So Tesla had come up here and it touched once. It was butting up against all this previous area of consolidation that was acting as resistance, and it had acted as resistance back here too. This was a big point of resistance, guys. I mean, think about through the days how many people got rejected off of these levels multiple times. I mean, here obviously it gapped up and it broke that level, came back through it, but it tested once, it tested twice, got knocked down. I mean, think about it. If you had gone, tried to get in for the breakout here, but got stopped out once, got stopped out twice. Look at this. When it finally did break, it broke roughly 735 and came all the way up to almost 760. 758 basically. I mean, can you imagine if you had gotten in on this last move here with let's just say 30, 40 shares. We'll just say 40 shares, okay? At 735, if you got in on that breakout and say took 20 of your shares off here at 745, well, that's $200 you'd be locking in there on the first 20 shares. And then at 755, take the other 20 shares off. So you've made $20 on the set. So you've made $600. You've made $600. So you could have gotten stopped out twice right here. You might have lost $150 here, $150 there, maybe just $100, maybe just $100 and, whatever. But so you might have garnered $200 to $300 of losses here. But when this made this move right here, you made $600. You made all of your losses back, plus you made an additional $300. It was worth it. Okay. If you know your chart patterns work, if you trust them, if you've seen them, if you've tested this strategy over and over and over again, you've got to fight that fear. You've got to remain confident in your strategy. And you can do that by cutting your losers short and by letting your winners run. You can cut that by saying to yourself, you know what? So what if I'm wrong once, twice, even 3 times? When I'm right on that 4th time, I've seen this pattern work out enough times. When I am right, this is going to go, and it's going to go hard, and it's going to work well for me. And you just have to, sometimes it's really just keeping the trade from getting in your mind, and you just staying right there in your own mind, encouraging yourself, reminding yourself of what you know to be the truth. Okay. And you know that the truth is that these patterns that you have studied, that you have tested, that you have proven over and over and over again will eventually work. Okay, and you got to stick to that. You just got to stick to that. And again, you can remain confident by saying to yourself, well, you know what? If it goes against me, I'll take a $50 loss. Oh, well, big deal. I can come back from a $50 loss. For some of you guys, it might be more than that. You might think to yourself, I can take a $500 loss. Who cares? Because when this works out, I'm going to make $2,000. Okay, so you could be wrong, 2 or 3 times, and you're still going to make $2,000. You'll make all those other $500 losses back, plus you'll make $500 on the day. Okay, so or it could be a $3,000 move and you'll end up making $1,500 after recovering all those losses. So whatever your risk to reward is, whatever kind of share size you trade with, this can be applied all across the board. But guys, I got to tell you something. Trading has been really rough for me lately. It's been rough for me personally. Okay. And so I've been kicked in the teeth a lot of times by this market. I've been faked out a lot of times by this market. We are in a place right now where if we just look here at the SPY and the daily chart, and those of you who've been following my videos for a while now, look at this move. Look at this move. This is ridiculous, guys. This is a huge move in the stock market. We have taken such a crushing loss. And dealing, with the economy the way that it is, and just everything that's been going on, it's and nobody expected this to make such a strong recovery like this. Okay, but every day this market continues to just kind of push itself up and continues to defy all logic and just continues to inch its way up. We haven't had this major pullback that a lot of people are, have been waiting for. And so for me, as a short bias trader, I'm a bearish trader. And the bears have been getting their faces ripped off every day, thinking that this market is going to come back and at least retest some of these lows before it starts making its way back up again. But the bulls have just found a lot of favor here, and they've been, so anyway, again, for a short bias trader like me, watching my strategy just get faked out time and time again, it really can mess with me mentally as a trader. And I've got to find ways to overcome that. And again, I am just finding that if I just continue to work the strategy, be mindful that the fake outs they're coming more often than not. And just be mindful of that and be ready to cut those losses quickly. I look back on my trading week this past week, and there were 2 devastating days that really came by 2 devastating trades. And they're trades that I did not cut my losers quickly on. Okay. And that was the problem. That was the greatest problem of this past week for me. It was not cutting those losers short. And so I incurred 2 heavy losses on 2 heavy losing days. And it was because it all could have been avoided by me just cutting my losses. Okay. And cutting them quickly, much quicker. Okay. And you know what? I could have actually had really big winning trades if I had just remained confident in my strategy, because there were trades that I could have taken that ended up taking off without me because I was fearful. I let the markets mess with me. So if you stay consistent, if you continue to trade your strategy, and when you see these chart patterns playing out, just continue to take a shot at it. But just know that if it goes against you, you've got to take that loss, because what's going to happen is the 3rd, 4th, 5th time that trade is going to go in your direction, and you will more than make up for all those tiny little losses. Okay, so hope you guys enjoyed this episode of The Trader's Mind. And for those of you who are new to the channel, just know that we trade live here on the channel. I run a live stream Monday through Friday, beginning roughly around 9 a.m. Typically come in, go over the pre-market activity, talk about what the overall markets are doing as a whole that day, and just, end up trading roughly about, once the bell rings at 9:30 till, roughly 10:30, 11, maybe 11:30, and we got a good group of other traders that come through, and they also have a lot of great advice, and everybody kind of chips in, and we're growing a nice little community. So come be a part. And to the rest of you, if you enjoyed this video, please like, comment, let me know if there's let me know what you do when you are battling fear with tough trades, when trades just continue to seem to work against you. Like, what are things that you do to battle that fear and to remain confident in what you know is a proven strategy? Let me know down in the comments, and consider liking, subscribing, and we'll see you guys Monday. All right, have a great weekend. Take care.